Hello everybody, welcome back for another video. Hope you're all doing well and having a great day. To start things off, Mike Novogratz, someone who is in my videos more than I am, recently spoke about where he thinks the cryptocurrency market is heading. Mike Novogratz, a billionaire investor and former Goldman Sachs and Fortress trader, told Eric Schatzker at the Bloomberg Invest Summit in New York that the cryptocurrency market is moving to the $20 trillion region. He said during the interview, which was focused on the economics of the cryptocurrency market, Novogratz was asked by Schatzer about the criticism from skeptics regarding the rapid movement of the valuation of the cryptocurrency market in the bubble-like trend of Bitcoin in early 2018. In response, Novogratz stated that if the January bull rally of Bitcoin, Ethereum, and other cryptocurrencies is considered to be a bubble, it can be described as the 1996 dot-com bubble, which occurred prior to the 1999 bubble that led the dot-com bubble to reach a valuation of $6 trillion before it crashed back down to $1 trillion, which is still a lot of money. Eventually, Novogratz stated that the cryptocurrency market will rebound from its major correction in mid-2018 and surpass previous all-time highs to reach a $20 trillion market valuation. At its peak, the cryptocurrency market was valued at around $900 billion. A $20 trillion valuation would require a 20-fold increase from its previous all-time high. He said cryptocurrency is a global revolution. The internet bubble was a US only thing. It was rich US people participating. Cryptocurrency is global. There are kids in Bangladesh buying coins. It is monstrous in Tokyo, South Korea, in China, in India, and in Russia. We've got a global market and a global mania. This will feel like a bubble when we're at $20 trillion, said Novogratz. While Novogratz is often considered as an optimist and a bull investor in the cryptocurrency sector, he has offered a valuation of the cryptocurrency market based on real indicators, statistics, and realistic overview of the industry. Novogratz emphasized that despite the growing demand for institutional investors for cryptocurrencies, actual investments that have come in from institutional investors have virtually been non-existent, and the most recent bull rally was triggered by retail investors or individual traders. Once again, somebody else coming forward saying they were going to hit multiple trillion. I guess it all feels a bit odd right now because of how the market has been going, especially because the market is continuously going sideways. If we're ever going to hit 20, I don't know. I still have my not doubts. I don't think we're going to hit 20 trillion for quite some time. I want to say like 2 or 3 years, somewhere around there. But it is very true if you realize, I was listening, once again, I've said this phrase so many times. I was listening to a podcast. I listen to like 5 or 6 every single day when I'm outside walking. And they were talking about the tulip mania, and they were saying why they get annoyed when they hear people talking about cryptocurrencies and they compare it to the tulip mania. They said, it's one thing to trade bulbs or to declare that bulbs, flower bulbs have some type of value. But when you're talking about essentially like a payment method that allows everyone in the world to participate, it's not people just trading flowers or trading Pokemon cards, whatever you want to call it. I have never seen so many, I've met so many random people and heard so many people on the trains. I've heard older people around like 60, 65 on the train talking about blockchain and about Bitcoin and buying it. It's all very interesting to see exactly who's in this space. I'm pretty sure there's so many more people into cryptocurrencies than you probably know. I'm sure you all have a friend who's definitely into it. But this is why I don't think that what we have or what we had, especially the beginning of this year, was a bubble at all. I don't think we're anywhere close to being a bubble. I think 20, 30, 40 trillion is probably a bubble. But when you talk about the entire world being in on this and how many people there are and how many people have been buying and are buying every single day and are hoarding these coins, I think it is, we're barely scratching the surface of exactly how big the cryptocurrency market will definitely become. Next up, Huobi is in the news once again. They've been in the news at least 3 or 4 times the last week, which is kind of odd because no news from them, and now they're constantly sticking their head in talking about new things that they have going on. Huobi, which is the world's third largest cryptocurrency exchange by trade volume, is set to open a new crypto trading marketplace in the United States. Singapore headquartered Huobi will be setting up a separate company in San Francisco called HBus, according to reports. The company clarified its position on a Medium post explaining that HBus is not an arm, subsidiary, division, or any type of affiliate of Huobi, nor is HBus to be referred to as Huobi US or any variant thereof, even though, to be fair, HBus does look, relatively close to Huobi US. HBus is the exclusive US strategic partner of Huobi, and Huobi is the world's largest provider of virtual currency related services. According to the report, HBus will be aggressively expanding, seeking out new blockchain partners and offering new client incentives and giveaways. The official website offers 100 days of zero-fee trading and Bitcoin prizes for those who deposit a minimum of $1,000 and complete level 2 verification. There's no official announcement on the launch date, and the website remains open to registrations. I'm going to assume, once again, this is going to happen sometime in 2018, just because of the news, once again, for the 10,000th time, that all the institutional investors are supposed to come into the market sometime relatively soon. There was news on this. I don't think I have any information on it in the tabs. Maybe I do. But apparently, what happened is that a day or two ago, the SEC, someone from the SEC came forward and said that they expect to give an answer on both Ethereum and Ripple within the next couple of weeks and not months, as in, relatively soon, potentially in June. So this could be the start and or end, not the end. The market's either going to go up or go down, as the old saying goes. But apparently we're going to have some type of clarification relatively soon, because like I said, they already know what they plan on doing. So it seems that everyone's kind of gearing up, creating all these things and creating their HBuses for the money that is supposedly supposed to come into the market within 2018. Next up, manipulation talk is once again in the news. Regulators from the U.S. Commodity Futures Trading Commission, or the CFTC, reportedly demanded extensive trading data from several cryptocurrency exchanges. People familiar with the matter told the Wall Street Journal on June 8th. Regulators requested data in order to investigate whether manipulation might be compromising prices in digital currency markets. The probe followed the launch of the Bitcoin futures by CME Group in December of last year. CME forms its Bitcoin future prices based on data from 4 cryptocurrency exchanges. They are Bitstamp, Coinbase, Itbit, and Kraken, where manipulative trading could reportedly have distorted the value of Bitcoin futures. Investigators are going after trading schemes that can be used to manipulate the price of Bitcoin futures and the government directly regulates. It was my idea before, stupidly, that they were kind of doing it to protect the space. They were trying to figure out exactly why this manipulation was going on. And I thought in my head, in my own special way, I was like, oh, this is great. They're definitely doing what they should be doing, and they're trying to make sure that they protect the people who are trading in cryptocurrencies. But it kind of comes down to that the people who, the CME Group and I believe CBOE, they pretty much got upset that someone else was messing with their money, and this is why the government stepped in. So it wasn't for us. It was for them. After the settlement of the first contract in January, CME requested that the 4 exchanges provide trading data. However, several of the exchanges declined to cooperate, stating that the request was intrusive. The crypto exchanges only handed over the data once CME shortened the time window of its request from 1 day to a few hours, said the sources. According to the Wall Street Journal, CME originally sought the information through a third-party London-based company that calculates the Bitcoin price to use for its futures contracts. The sources added that the crypto exchanges did not want to hand over their data to the British firm, which also runs its own trading platform. Why would you hand over your data to your competition? Reportedly, regulators from the CFTC were upset that CME does not have agreements which obligate crypto exchanges to share price data that is related to futures contracts. According to the Wall Street Journal sources, the quarrel between the CME and crypto exchanges was an impetus for the CFTC to open an investigation into the matter. There was also news about, it's not funny, it was also kind of funny. There was also news about a day or two ago where the SEC, they pretty much said they're not happy because they expected more people to be excited about regulators coming into the cryptocurrency space. Like I don't have the tab open. They literally said more along the lines of, we're disappointed that more people aren't happy that we're in the space and that we plan on regulating the way that we do. They were kind of let down that people from both sides weren't cheering their activities and them trying to control the space. Let's see if they end up finding anything. It's clear as crystal, clear as a window, that some type of manipulation is definitely happening. If they'll be able to figure this out, I do not personally think so, especially because the people, realistically, if you are trading and or manipulating a market, or you are doing it, in the 10s, 20s, 30s, hundreds of millions of dollars, you probably have figured out a way to hide your location or hide where you are so that no one can really know what's going on. But it's like, I'm all but certain this is definitely happening, but my theory still goes that these people are doing it not to push the prices down, but more so to keep them down, to keep filling their own pockets. Because if things like, I'm pretty sure they have also heard the $20 trillion valuations that are also floating around. We had someone else say a couple of days ago that cryptocurrency was going to hit $50 trillion. So when you hear things like that, and you know that you can potentially get 50 to 100 Bitcoin per day by manipulating the value, that's only going to completely accelerate, especially as we get closer to 2020. Next up, BitMEX, which I believe, if I'm not mistaken, is a futures trading platform, has announced that they have added EOS to their platform. On June 7th, the co-founder and CEO of BitMEX, Arthur Hayes, officially announced on his Twitter page that BitMEX has listed EOS on their platform and is now available for trading. A lot of people were, I'm not going to say what he tweeted, a lot of people were interested as to why he added it, especially when EOS has not officially launched yet, which is, at least now, it appears it's going to happen by sometime next week, possibly on Monday. Don't hold me to that. Earlier this year, Hayes announced the launch of the new EOS futures contract after making significant changes in their trading engine technology. The EOS token listings for futures contracts EOS M18 is scheduled for the 7th of June and the 29th of June. Apparently, I think they had EOS futures listed in like January or something like that, but it didn't really make much sense because the platform still wasn't out. So this seems to be the reason why they are going ahead with launching it now. Let's see exactly what ends up happening and if there's going to be some type of manipulation like we've seen in the Bitcoin price. Next up, Bitcoin ETFs have been in the news for literally about 2 years, and well, yeah, here we go. Van Eck and Solid X, two prominent firms in the digital asset space, have agreed to collaborate in launching a Bitcoin exchange-traded fund, or an ETF. Both companies have previously tried to launch a Bitcoin ETF offering but failed to receive regulatory clearance. Van Eck and Solid X have entered into a partnership to list a physically backed Bitcoin ETF. Van Eck will be responsible for the marketing services function, while Solid X will handle the ETF sponsorship. The ETF application was filed with the SEC on June 5th of 2018. Commenting on the partnership, John Van Eck, the CEO of Van Eck, told Business Wire, "I believe that Bitcoin has emerged as a legitimate investment option, as a type of digital gold that may make sense for investors' portfolios. The Solid X team has in-depth experience with Bitcoin, cryptography, and capital markets. We're pleased to join them in supporting the effort to bring a physically backed Bitcoin ETF to the market." In 2017, Van Eck filed the first ever 40 Act Bitcoin ETF. In 2016, Solid X filed the first ever physically backed Bitcoin ETF. The two firms are now hoping to get approval this time around. Daniel Galancy, who is the CEO of Solid X, said, "In determining a marketing partner, we look for a firm with a clear understanding of the potential of Bitcoin and the role it can play in an investment portfolio. Van Eck is deeply involved in the space, understands its potential, and has a long track record of successfully opening new avenues for investors to access unique and compelling investment opportunities. We're excited to work with the team at Van Eck. For those who are relatively new to the space or just don't really care about ETFs at all, Bitcoin ETFs are apparently like the holy grail for the trading markets, the cryptocurrency markets, whatever you want to call it. This is why it was such big news when we got futures were allowed, because it's had the name Bitcoin in it, and it was something that was tied to the price of Bitcoin more or less without it being physically backed. The Winklevoss twins have tried at least 3,800 times to get an ETF pushed through. There have been at least, I want to say, over 100 ETFs in the US that have tried to get started in some sort of way. The SEC will not let them through. They say that the space is still too new. They need more regulation. They say once again that they're afraid of allowing this because institutional investors or normal investors won't know exactly what they're doing. So they've shot a lot of them down. And literally the first company that is allowed to create their Bitcoin ETF or be able to go forward with their Bitcoin ETF will definitely be making a lot of money from it. Because it seems, I don't know what it is with the SEC. My theory is, for a long time, finance, as we knew it before cryptocurrencies, everything took a relatively long time. Everything took not minutes or hours. It took not even days. It used to take like months, sometimes like a year and a half in order to get like one tiny thing pushed through before you were even able to file that you wanted to end up doing something. So I think the regulatory space is trying to keep up. But if you've been into cryptocurrencies for at least a year, maybe even less, you know that things move relatively quick. This is why we constantly have so much news going on, because there's always something new that's happening in the space. There's never a dull moment when it comes to cryptocurrencies, and people in the cryptocurrency space know that things move so fast that they just kind of want to get it going. I have a feeling my personal opinion, if we didn't have the SEC or the CFTC kind of breathing down everyone's backs, I think we would have a more chaotic space right now. But I think things would have moved so much further than they are right now. They're definitely hindering the furthering of the markets and the furthering of any type of innovation that can possibly happen in this space. They're definitely doing it on purpose. There's no mistake about that. They're not doing it because, at least I believe so, that they're trying to actually save normal investors. They're doing it because they are perplexed. They don't want to let this run amok. And there's been news the last week or so, the last 2 weeks, from all these higher ups saying that literally cryptocurrencies are the future and other people have to kind of get it together. But for some reason, whatever the reason might be, the US just won't push forward and let the future happen, if you kind of want to say it this way. Next up, Litecoin Cash is in the news, not something you ever really hear about, and it's not the greatest news in the entire world. With all the media coverage surrounding double spend attacks in recent weeks, it appears that one such exploit, a 51% attacks on Litecoin Cash, managed to slip through the cracks. The alleged incident appears to have occurred on the 30th of May, when Russia-based cryptocurrency exchange Yobit tweeted that it had identified a 51% attack on the coin, which forked away from Litecoin in February but has struggled to gain traction in the month since. I'll tell you exactly what I think happened as we read a bit further. Litecoin Cash developers appeared to allude to the attack in an announcement published the following day, adding that they are discussing a range of strategies to prevent similar incidents. They said, "We are currently investigating consensus-based strategies for increased protection against hash rate-driven difficulty manipulation attacks. Some options may include proof-of-stake ideas. Our 0.16 code base is otherwise ready to go, so along with increased network protection will come great features such as native BEC32. Litecoin Cash's developers further said that while a long-term fix will likely require a hard fork, users should wait at least 100 blocks before feeling confident that a transaction has been confirmed and cannot be reversed by a malicious miner." You may have noticed this is about the fourth or fifth coin. Verge was attacked twice. This was attacked. Oh gosh, what else was attacked? It wasn't Zilliqa. I can't remember the names of the other coins. That, I guess, goes to show you that they're not the largest coins. What I think is happening is, for those who don't know, when EOS first tried to launch, the reason why it's taken a little bit is because the blockchain had to be built. And the other part is that voting had to take place. And this is kind of what's going on right now. A lot of people don't know that their blockchain was being attacked because people don't want the project to go through. And a lot of people are a bit annoyed that there are so many coins and stuff out there that they're literally trying to destroy the other coins' blockchains, whether it be for momentary profits, i.e., 51% attack, you can control, the double spend, you can create coins for yourself. A lot of people are cashing these coins out into the larger coins, usually Bitcoin and Ethereum. And what I think is happening is that I'm more than certain these are all coordinated, because for years we had no news about 51% attacks. I think they're purposely, whoever they might be, are attacking as many coins as possible, trying to get 51% attacks, because when you get negative news like this is news that can come back to haunt you forever. We still have news from Bitcoin about Mt. Gox. Think about how long ago that was. So I think as many of these new coins continue to try to get forward, a lot of them are going to be attacked more and more and more. This is just how I feel about it, especially when Litecoin Cash was being created. Charlie Lee even came forward and said that it was a scam. He didn't like it. He wished something would be done about it, and a lot of other people share the exact same sentiment. So I'm sure people are literally going through the list of coins, attacking them, as many of them as they possibly can. It's interesting because we don't need this many coins, but then it comes down to, do we need to attack other people's projects in order to further the success of the top 10 coins that we have right now? I feel like it's all coordinated. There's no way that, we have all these 51% attacks over the last 2 weeks. It's all kind of, it is what it is, but this is the latest news from Litecoin Cash, like I said, and it's not the nicest news because we barely hear about them, so to hear about them this way is, not that great. Last up, we have news from Russia once again. They flip-flop like crazy. A report from Russian Analytic Credit Rating Agency, or ARCA, A-R-C-A, released Thursday on June 7th, states that cryptocurrency is not yet usable as a means of payment. According to ARCA, cryptocurrency does not currently perform any of the functions of money, as the exchange rate volatility is too high, comparable with the volatility of food prices, to allow it to be efficient as payment. The report also notes that the use of crypto does not yet reduce transaction costs in the economy due to its energy inefficiency, lack of economics of scale in the provision of cybersecurity, and the low speed of entries in the register or the blockchain. They said all of these factors lower the value of the potential advantage, which is the reduction in the number of intermediaries in the settlement of banks. ARCA writes that a comparison of crypto with fiat currencies with their own intrinsic value highlights how cryptocurrency's market value is formed mainly on expectations of investors' readiness to sell in the future at a higher price. The factors that could increase the use of cryptocurrency, according to ARCA, include the toughening of sanctions against the backdrop of growing foreign policy and external economic tensions. Of course, we need more sanctions and other things like that. Yesterday, during his annual live question and answer with the public, we spoke about this yesterday, Russian President Vladimir Putin spoke ambiguously about but mainly negatively about cryptocurrencies. He said, however, Putin did note that Russia will look into how they can use cryptocurrency to avoid any restrictions in the field of international financial activity, which could have been a reference to avoiding the Western sanctions currently imposed on the country. I am all but certain that is definitely happening. If you don't keep up with the normal news, I know a lot of people don't read the normal news because it can be quite depressing. Russia and a couple of other countries are definitely mining Bitcoin, and they're definitely, I'm certain of it. They said yesterday that they weren't going to create their own cryptocurrency. I'm going to assume that means we're not going to create a national cryptocurrency, but we're definitely going to create a cryptocurrency that can be used between governments, if you understand what I'm saying. Because Russia is not too happy about all the sanctions, especially there's I think 10 countries around the world that are under US sanctions. I'm pretty sure they're going to have some type of medium of exchange that will be able to circumvent the US dollar. That's just kind of how I feel about it. But when it comes to, I don't know. Russia one day loves cryptocurrencies. One day they hate it. One day they want to integrate it. One day they talk about creating their own. Another time they talk about, there were so many rumors and kind of, I guess, clarification that it had actually happened about Ethereum possibly integrating Ethereum into the mix. Russia integrating Ethereum. Sorry about that. I think I said Ethereum twice. Whatever. Because there was like a short documentary of Vitalik Buterin. I think he took a trip to Russia, and they were courting him around because apparently Russia loves the Ethereum blockchain. Who knows exactly what's going on with Russia? I sure as heck don't. Let's see exactly what they end up doing within the next couple of months. I think they could be a big player, but I think more or less the market doesn't significantly care. Don't mean to be mean by saying that. If they enter the cryptocurrency space, full force or not, because they're not really a major player. I don't think they ever were a gigantic player. But let's see exactly what ends up happening as time goes along. Alrighty, everyone, that's definitely going to do it for this video. Hope you guys enjoy your day, your morning, afternoon, evening. Hope you guys enjoy your weekend if you're listening to this when I posted it on the weekend. Thank you once again for watching. Hope you guys have a great day, and I will talk to you all soon. See you.